Let's start with the Indian rupee then. It was a very volatile trading session for the unit today. The rupee fell below the psychological important 56 mark against the dollar for the first time in this week. The unit inched closer to its new record lows before closing at around 56.23. So what's weighing onto the Indian rupee? The European debt crisis and the beaten down euro is pushing the currency lower. Also, dollar demand by importers played onto the sentiment in the rupee today. Let's get in our experts then, and Mr. Moses Harding, Executive Vice President and Head Global Markets Group, IndusInd Bank, joins us in the studio. Also joining us is Vijay Bhamwani. He's author, CEO, BSPLindia.com. Let's start with you, Mr. Moses, and the kind of decline that we have seen yesterday, more than a percentage point. How have you made out of this rupee decline today?
Actually, there is no strong reason for exporters to sell dollars. Exporters have been selling dollars from 54 to 56. Anticipating that RBI will come into its rescue. But RBI is doing some baby steps which are currently ineffective. So some big bang measure was expected from RBI. There's a delay there. I think that's what rupee is getting weakened. And moreover, taking cue from the weak domestic fundamentals where the solution will take a very long period. The external factors leading to dollar rally, that's also playing heavily on the rupee. So as of now, after discounting the weak fundamentals, domestic fundamentals, I think rupee is tracking the dollar index. And if the dollar index is going to rally past 82.60 to 83.10, then it's going to be very tough for rupee.
82.5 holding on the dollar index. But Mr. Harding, which is a bigger concern according to you? Is it like the international markets, the euro going down, or is it the India's deficit concerns, or do you think it's the capital inflows which are just not coming in?
In my view, there are four critical areas of concern from the domestic economy. Number one, the reforms rollout to attract capital account flows. Then number two, cutting the non-essential import to address the current account deficit. And the balance of payment issue is resulting in flight of capital from India to abroad, that's squeezing the rupee liquidity. And fourth, importantly, the dollar rally against major currencies and emerging market currencies. And unfortunately, there is no political will to address either the capital account flows to roll out the reforms, nor to address fiscal consolidation by passing on the cost subsidization, nor to cut non-essential imports, because the gold imports partially has been rolled back. So given the absence of political will to address this core concern, I think RBI may not be in a position to supply liquidity so that to convert the deficit liquidity mode to the surplus mode. So I don't see any way forward on these four critical issues. It's like a dead end. I think we need to look for some big bang measures from RBI to really guide a bullish reversal into rupee to get the confidence back on rupee.
So what could be these big bang measures?
In fact, I had set up a 52-57 range when rupee was 52.5. I was looking for a gradual depreciation in 3 to 6 months' time. But that depreciation happened in a month's time. So that's the worry. Now, given these concerns, I think 55 is a strong base. And if RBI is unable to come out with the big bang measures of either opening the special counter for supplying dollar or a minimum $20 billion issuance, I think we are at risk of posting a new all-time low beyond above 56.39, the next target being 57.5, then 58.25 to 58.5, all the way to 59.75 to 60. So as of now, I'll stick my neck and say, we'll look for a 55 to 57 range, taking confidence from RBI that they will not allow rupee to depreciate beyond 57 because rupee is already highly devalued. I think devaluation beyond 57 with high inflation and high interest rate will hurt growth prospects. So we are in a vicious cycle. I think betting on RBI, I'll give a protection at 57 and look for a 55-57 consolidation. If that's not happening, then we are extending up to 60 all the way.
Well, that's a near-term range. But Vijay, let me get you into the conversation as well. On the charts, how is it looking for the near term this week?
Well, Manisha, I would agree with Mr. Harding. I was also expecting the rupee to basically correct a little and give some kind of breather to the rupee bulls, but that's not happening at all. Now, I was expecting a 54 or maybe 53.75 kind of a support but the rupee is not even going there. So my guess is anything below 55 levels, and I think the US dollar is likely to get support all the way again. And the all-time high is not very far off for the USD. So my guess is in a day or two, if there is no kind of administrative support, the rupee is likely to inch towards the 57 mark, which is again not very far off. We are seeing a depreciation of almost 1% as a given per day. So I think long dollar, short rupee strategy still remains in place, unfortunately so.
How much of a strength do you see, Vijay, in case of the dollar index? Because we seem to be holding around that 85.60, 82.60, I beg your pardon, 82.70 also has been seen. Are you looking at much further gains from here?
Manisha, last week I talked about 82.40 as being a level to watch. Now we've gone past that. Now clearly the support in case of a decline will be at 81.40 to 81.60 band. I don't see the dollar index falling below that. So the support is established now. As far as the resistance is concerned, I think 82.88 will be the near-term resistance to watch out for. Should the dollar index rally past that, I'm afraid the rally might just get a little more accelerated, because the bear squeeze itself will mean that the erstwhile bears itself will want to turn bull and cover their position. So above 82, 85 odd levels, I think 83.40 might just come a little more faster.
Right. So, Mr. Harding, the technical charts also are supporting your levels there. But where do you see the whole of the Asian currency markets as well? Because it's not just a dent coming in the Indian rupee. Of course, we are the worst performers, but the concerns pretty much is there in the high-yielding currencies.
See, the comparison of Indian rupee with the other emerging market peers is not an apple-to-apple comparison, because they have current account deficit, low inflation, low interest rate, and easy liquidity. But given the bearish setup on rupee, obviously when the dollar rallies against emerging market currencies, I think the rally against rupee will be much faster and the gains will be shallow. I think we need to live with that till we address the fundamental and structural issues. But having said that, in fact, last when we met, even euro was trading around 130 or so. My target was to move towards 122 to 118, and we are already 50 to 60% journey is completed. So if you're, euro looks good for move to 122 to 118 with dollar index towards 85. So that puts rupee at a greater risk, and weak fundamentals and strong dollar, I think it's going to be a bloody battle for rupee.
All right, a bloody battle for rupee then. Thank you so much, Mr. Harding, for joining us with your sense on currencies there. So rupee is going on its way to depreciation, and look out for the dollar index, because much of that money flow is coming in for that.